Hello and good afternoon, evening, morning, wherever you are. Thank you so much for taking time to listen to this recording. This recording was supposed to have been done last week when we had this session, but unfortunately, due to some technical glitches, I couldn't record. So I am doing this part one walkthrough for CIMA operational level case study analysis for Halfpenny, our August case study material. So my name is Lewis. I'm the lead tutor for the operational level case study with Graduate School of Accounting. So what I'm going to do today, I'm just going to take you through the Halfpenny Pre-seen material. You see me looking around. I've got two screens here. I've got all my notes all over my desk, so I'll be looking here and there. And I expect you to do the same as you work through your material. Make a lot of them, make some notes, write everything down, what you can remember, what you can't remember. It's easier when you've got your mind maps all over just to connect the dots. So a bit of boring stuff that I'm going to do first before we go into the business of the day. This is Halfpenny. This is the same pre-seen analysis that was used in the May exam. So the examiner don't expect you to incorporate or to have all these global changes in this pre-seen material. No, but you can factor them in your explanations, in your answers, perfectly fine. So we are here now, but let's look at where you are coming from. What's the background that you're coming from? You might have completed your objective test if you're studying through the self-tailored route. I prefer to call it the traditional way. You have written the objective test for P1, E1, or F1. Or you might have got some exemptions for some of the subjects, whatever the case might be. That's the self-tailored route. Or you are through the finance leadership program. I know most of our students here are coming through the finance leadership route. You have completed your competencies, or maybe you have one or two left. If you've got any outstanding competencies, I would say you need to finish it as soon as possible so that the entire month of July, you need to be engaged in your pre-seen analysis. There are one or two students that are also coming through this special pathway, which we call the corporate pathway. You might have received exemptions of the entire P1, E1, F1 based on your practical experience. So if you are coming from that route, I would say you need to engage me outside this call and we can have a conversation, because sometimes due to the nature of the exemptions that you might have received, you might have some knowledge gaps in between there. We need to have a conversation. But these are the most common routes that you might have come through. And the case study exams is available 4 times a year. You can write in February, May, August, and November. And it's available on a 3-day period. So you can write on a Wednesday, on a Thursday, or on a Friday. You can pick any one of those. So CIMA, there are different exam variants that are set on those different days. But regardless of what day you sit, you can be rest assured that the exam standard, let's talk about exam standard, degree of difficulty, or how easy it is, it'll be the same. So that is why CIMA uses the scaled score scoring system, just to make sure that everyone gets a fair marking. So what is the pre-seen material? The exam is based on a pre-seen scenario. So this material is released approximately 7 weeks before the exam window. And the most important thing is to understand that the pre-seen is valid for 2 sittings. So the material that is used in May, it's used in August. So the Halfpenny, our bread manufacturing company, is the same material that is used in the May sitting. It's the one that is going to be used in August. Thereafter, we are going to have a new pre-seen that is going to be used in November in 2025. And February 2026. So again, this is very important when planning your exams. I always say, try to write your first exam sitting with the first window of the pre-seen, so that if you, just for illustrative purposes, if you wrote in May and for some reason you don't pass, that means you can, the same pre-seen material is in August. That means your preparation there, it's kind of revision, because you've done most of the hard work in there. So these are small little things that you might want to consider in your in your planning. Receipt rules, that's what exactly I just mentioned now. So more information, just go and see there. Right, your role at operational level. This is very, very important, because in my many years of working with CIMA students, I think it's a small little mistake that many students make when they write their exams, that it's for some reason, the exam pressure, or that the students forget what role they are playing in the exam. Operational level, you are the finance officer. What it means that you are working within the finance department, responsible for preparation of budgets and other reports. Straight away from that role, it tells you what is your responsibility. Budgets straight away is mentioned. So it makes sense for you to know budgeting. And other reports, then you need to know what other reports comes or are prepared by the finance officer within an organization. Forget about Halfpenny. Think of the role of a finance officer in the company that you work for. What do you do on a daily basis? Then we are going to spin that and say, now we are working for Halfpenny, a bread manufacturing company. So think of it in the context of a manufacturing company. What do a finance officer do? Right. So this role of a finance officer is mostly focused on short-term and implementation decisions. So what it means is, straight away the examiner is telling you that if you come in the exam and come up with these long-term decisions, we are not expecting at this moment that we are going to ask you at management level and at the strategic level when your role changes. Because when you go to management level, your role changes to that of a finance manager. And on the strategic level, you are typically a CFO. So that's where you have the long-term focus, long-term decision, more planning. Here is implementation of what has been planned from the hierarchy. So let's get that right. Now, finance officer, preparation of budgets, focus on short-term and implementation of decisions. We need to get, so when we start going through a material, we need to have that at the back of our mind. Now, when I was just trying to figure out to say, right, what to do, let's look at some of the duties that I expect you, or you are expected to do as the finance officer at this Halfpenny. It's a manufacturing company. So one of the aspects that you're supposed to be doing is budgeting and forecasting. Short term, remember the focus is short term, is focus in implementation. So prepare and manage annual budgets aligned with production and sales targets. If you go into our scene, I think it's on page 27, from page 20, from page 24 to 27, you will see there are lots of cost cards in some other budgeted and expected. So we need that. You need to spend some time looking at that, and there will be an aspect of variances that will come up again. Monitor actual performance against the budget. We are going to look at the variances, different types of variances, and how do we interpret those variances? What do they mean for Halfpenny? What is the impact on our financials? That's what we're going to be doing in the short term. Forecasting financial trends, considering raw materials, flour, yeast, packaging. Again, if you go through Halfpenny in this pre-seen here, lots of information regarding the products, the raw materials that are used there. If you go to page 27, again, you're going to have lots of flour being used, fast action yeast, packaging, and other stuff. So we're going to spend, again, get into a bit of that. Then there's an aspect of financial reporting. We are given here our income statement. We are given our statement of financial position, and we're given our cash flows. So the numbers have been done for, the preparation has been done for us. What we need to do is just to do a bit of numbers there in terms of variances, a bit of numbers there in terms of changes, in terms of maybe it could be the GP and things like that. But in the exam, I do not expect you to do any calculations. So we are going to do the calculations as we are preparing build up for the exam. So, and you have those numbers in your fingertips so that you can remember them and you can use them. You can explain them, what they mean and their impact on the business, on Halfpenny. Don't do any calculations on the exam day. If they are there, they have to be very, 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 very minimal. Right. Cost control, again, we are going to look at all our direct material, direct labor, overheads. How do you treat them? Obviously, we are going to look at different costing methods there. Ask yourself, what's the current costing method that Halfpenny is using? And if there are going to be any changes, what other methods could they be considered? What are the benefits of those alternative costing methods? I expect you to have that. Inventory management is a manufacturing company, so there is an aspect of inventory management. So I'm going to expect you to know the different ways of inventory management and alternatives as well. You can be asked to make some recommendations there, how this is monitoring inventory levels and things like that. Concept like just in time, concept like lean production, concept like economic order and quantities, and things like that. We need to get them right. Financial risk as well. We need to look at that, and cash flow management from our cash flow statement. So those are the responsibilities, duties that I expect you to know that this is what I'm doing when I'm sitting in the desk, in my desk as the finance officer at Halfpenny. This is what I'm going to be doing. Okay. That's a bit of all the duties of the finance officer there. Let's look at some boring stuff, but very, very important again, the core activity areas. So the examiner expects you to know these core activities. There are 6 core activities for the operational level. Core activity A, that deals with the preparation of preparing costing information for different purposes to meet the needs of management. And they put core activity B, which focuses on preparation of budgets. Core activity C, which focuses on analysis of the financial and non-financial information. Very, very important that this is a CIMA qualification. Our focus is not just on the numbers, but it's also on the non-financial information, bringing aspects of key performance indicators in there and how they affect the business. Core activity D, it looks at the application of relevant financial reporting standards. So I expect you to know some few standards there. You don't need to be a magician in terms of knowing the IS what and IFRS what ins and outs. No, we are not preparing. CIMA is not testing you to be a pure financial magician, but you need to know how those IS 16, IS 2, and things like that, how they work. Core activity E and core activity D. Core activity E is more of information that supports short-term decision-making and managing working capital. So we are going to look at the changes like in inventory, payable days, receivable days, and things like that. It has going to impact on our working capital and things like that. So this is just the main headings. You need to go deeper into each and every topic that comes in each core activity. Right. So core activity A, this is the main focus areas here. Let me move this thing here to this side and this and close now. So core activity A focuses on ask yourself these questions. I can use appropriate technologies to gather data for costing purposes from digital and other sources. You read through Halfpenny. There's something fascinating that I picked up there, that the case is very silent in terms of digital systems and things like that. So could be something that the examiner might want to test you on, because remember, on the CIMA competence framework, right at the center is the digital skills. So you need to demonstrate your digital skills. So I would think of having gone through this, we'll talk about it later, what digital systems that Halfpenny could implement or could introduce. Different costing methods to produce costing information. Like I said earlier, what is the current costing method that Halfpenny is using? And if there are going to be any changes, what are other alternatives that you can bring up and you can explain and tell us the benefits? Okay. Can you explain that in simple terms? So you are going to be explaining some of this information. I'm talking about you working as a finance officer. Now you're talking to people who are like management accountants and financial accountants. They understand the technical jargon. But think of it, if you're going to be explaining what's happening to marketing managers and salespeople and other stuff, non-financial information becomes very, very important. They're able to compare different costing methods, absorption costing, activity-based costing, and all that stuff. Okay. Let's see if you go to this 12 to 18% syllabus weighting, which for me, there is going to be something there. 12 to 18%, that's a lot of weighting. Definitely on core activity B, it's 17 to 25% syllabus weighting. There will be questions from there. It's budgeting. And remember, in your role, when we discussed your role, we said you work in the department responsible for preparation of budgets, short-term focus, and implementation of short-term decision. Now, I need you to understand and to be able to remember the different forecasting methods. Before we start talking about them, how Halfpenny can use them, I need you to be able just to understand the different forecasting methods. I need you also to understand the different budgeting methods. Currently, ask yourself, which method is Halfpenny using? Incremental budgeting? Yeah, but if there's something going to change, maybe the examiner says your manager has just come from an expo or from a meeting where they were discussing about activity-based cost, zero-based budgeting. Are you able to explain the other, the zero-based budgeting, incremental budgeting, rolling budgets, and things and other budgeting methods? So I need you to be able to identify the different budget types of budgets, explain them, and recommend the benefits. So that not many marks are awarded for just telling us what is rolling budget, activity-based budgeting, but you need to demonstrate the skill of, in a given scenario. That's where you need to read the question carefully and then apply. So CIMA develops you the skills that are required as a management accountant. So we need to look at that as well. Explain to functional managers how budgets are used, how we can use the budgets in a given scenario as well. Activity C, variances. Very another core important aspect. It's a manufacturing company, and when I looked at the fact that they use flour, their raw material, there's flour, there's yeast, direct labor hours and things like that. Variances is almost inevitable. They're likely to be there. It's how they're going to be tested. Let's know the different types of variances, mixed variances, volume variances, etc., etc. And what are some of the factors that can cause changes in the variances, whether it's adverse or it's positive. What is the impact of that in our in our business, in our financials, in our operations, in our processes, in our structure? I also need you to be able, under core activity C, to explain the different KPIs, key performance indicators. So for you to be able to explain the key performance indicators, you look at financial and non-financial KPIs. I need you to focus or identify what are the key success factors that drives Halfpenny. If you can identify and explain the key success factors, it becomes a little bit easier for you to be able to explain your key performance indicators. Okay, core activity D, again, short-term decision making. Yeah, in the factors that influence short-term decision making, dealing with situations where risk and uncertainty, maximum, minimax, and all those things. I need you to be able to remember that under risk and uncertainty. Different scenarios in interpreting them. And F, therefore, we look at short-term finance and methods of short-term investment. Short-term. Right. You're not going to be talking about long-term, like equity and all that stuff. The focus is on short-term. So if you want financing short-term, how is Halfpenny is going to do that? Managing working capital. What are the factors that affect our working capital? And if there are any changes in those factors, how is it going to affect our business? Ratio analysis, very, very important. Know the 5 categories of our ratio analysis: profitability ratios, liquidity ratios, efficiency ratios, investors ratios, and things like that. Okay, so under those categories, there are different types of ratios there. So be able to calculate them. And when you're doing ratios, you must know which numbers do I get from our balance sheet, which numbers do I get from our income statement. That's how you can easily calculate ratios. For example, if I say current asset over current liabilities under liquidity ratios, I need to know current assets. Because straight away, I know I'm talking about assets, I go to my balance sheet. Current liabilities, I go to my balance sheet as well. No need to worry about income statement when I'm looking at this ratio. Then I'll do my numbers and get the answer and interpret what it means for the business, right? Can we meet our short-term obligations, right? What is the acceptable current ratio for Halfpenny? Or it could be my profitability. So sales over cost of sales, calculate my GB there. Where do I get my sales? My income statement, my cost of sales in there as well. So it makes easy if you understand the components of your income statement, the components of a balance sheet, your components of your cash flow. It makes your ratio analysis easier. And then when you do a periodic from year to year, 2024 to 2025, I think 2023 to 2024, then look at the changes. Is it increasing? Is it decreasing? That's why I need you to be smart. Comment whether it's increasing or decreasing. Make a comment. What does it mean for this business? And in the short term, what can be done by management to mitigate or to leverage on the changes of that ratio? That's 7 to 13%. There'll be something there in the exam. So your focus areas, therefore, should be on, from a P1 perspective, know your costing. Know your costing for short-term decision. Know your budgets, different types of budgets and their benefits. Variance analysis, like I emphasized that you need to know and calculate year to year and discuss the impact of the changes. From an F1 perspective, your financial statements, they are already done. The 3 financial statements, your income statement, your balance sheet, and your cash flows, they are done. You need now to interpret them. What is the impact? So look at the transactions and without doing massive calculations, look at the 2023, 2024, the numbers in your income statement. Just look at the numbers. Are they increasing or decreasing? What does it mean for Halfpenny? Right. Should management be worried, or should management say, oh, thumbs up, we're doing fantastic here? And then prepare some reconciliation, little adjustment there based on the movement of the numbers there. From your E1, you look at technology, data, and the role of the finance. It's fast, straightforward there. Now, just a summary of the key skills that you need to do there. I've just put some blocks there: your costing, your budget, like I said, variances, your interpretation of the financial statements, the role of digital in the world. I don't see too much in the case study, which means it's something that can be thrown in there. Communication and teamwork. If you look at Halfpenny, they've got a huge number of employees. I can't remember what it is when they talk about the number of employees that work. Okay, there on page 18, it checks with Halfpenny had the following number of employees as at December 31, 2024, a total of 2,208, right? And so you need to know that this aspect of managing employees, topics like motivation there, so could it be remuneration, financial and non-financial, motivation, intrinsic and extrinsic motivation. There's so many questions, using full-time versus maybe part-time workers, paying for fixed salaries, commission. There are so many things that can emanate from there. In fact, there is something fascinating that Sumira, I'm just looking in our case study there on page 10, Sumira, the human resources manager, he said, Samira is a firm believer that an incentivized workforce is more productive workforce, and he's just introduced new bonus scheme. So new bonus scheme, the examiner might be interested to know about the advantages and disadvantages of using a bonus system and what can be the impact of using a bonus system on our financials. Potential, something that examiner might want to test just from an E1 perspective. But don't worry, we are going to navigate through this. Just giving you an overview first before we get deeper into it. Right. Last piece of the boring stuff. What is the objective of the integrated case study? Is to assess your ability to integrate your knowledge that you have learned from P1, E1, and F1. Like I said right at the beginning, whether you came through the traditional route where you passed P1, E1, F1, whether you come through the FLP where you complete the competencies for all the three subjects, or the corporate pathway where you granted exemptions and you go straight into case study. The examiner wants you to demonstrate your knowledge. Integration, putting it together based on the information that you're given, Halfpenny. But remember, on the exam day, the examiner is going to give you new information that you've never seen. Then we need to put together that new information and what you know already that has been given to you and be able to answer the question. The exam type is computer-based, so you have to sit down and do some typing. It's not about your speed of writing, but you should have a decent typing speed because each task is timed. So all your 4 tasks, they are timed. It should be 45 minutes each. So you need to be able to answer all put all your points there within when the clock gets to 0. 3 hours as the duration, 180 minutes. And like I said, February, May, August, and November, that's when you can see this exam. The format of the exam, realistic business context. So this company we are given here, Halfpenny, they manufacture and they sell bread. So it's a realistic. So think of it in your own country. If you're watching this from a different country, which is not South Africa where I'm based, you could be thinking, oh, which company could be, do I know that operates the same. Try to replicate it in your own company that you know, so it becomes a little bit easier. The facts are almost the same for a bread manufacturing company. You act as the finance officer, right? So that's your role there that you're given. You are the finance officer. And there are 4 tasks that need to be completed. And each task, I need to be very careful. Each task, we have some subtasks in it. We have task A, B, C. There are 3 tasks that need to be done. We call them sub-requirements. So is task 1, particular sub-requirements in it. The exam is, the marks are variable 100. Each question is weighted between 10 to 25 marks. The pass score, guys, is 80. So don't look at it from a percentage perspective, because CIMA will give you a score, not a percentage. Okay. So what can you expect on the exam day? You are going to be asked to write an email. You are going to be asked to write a report or a memo or to write a briefing note. Why am I talking about all these things? You need to know the format of an email. Just that to say, if you don't know the format of the email, let's take it this way. CIMA is saying, if I read your answer script and I'm looking to hire a finance officer, can I hire you? I can't hire someone who doesn't know the format of writing an email. I can't hire someone who cannot write a report or a memo and things like that. So basic fundamentals, guys, in there. Calculation-based tasks with explanations, like I said, calculations don't be tricked too much into doing massive calculations, the whole 30 minutes trying to do some numbers. No, the numbers, we do them before now. We know, go in the exam, knowing the numbers. So this print is available for you on the exam day, but believe me not, I have walked this chain. I've written operational level case study. You won't have time to open that pre-seen. So the best you can do is to read this document here for the pre-seen as many times as possible. Why? So that you have it at your fingertips. You know exactly what's happening from page 1 to page 28. Know it. Know where my financials are. Know where the board information is. Know where the structure is. Know where the cost card is. And know you've done your variances, you've done your change, your ratio analysis, you've done all those numbers, so you know them. So if your comments, you know this is the company is making profit, is growing. I know the GP numbers, the changes in GP, and things like that. Prioritization and recommendation task and ethical scenarios. It's a professional body CIMA, so they'll likely be going to be a question that tests your understanding on ethics. So yeah, I think that's all about this. So tips. What are the top tips for analyzing of preparing for this exam? Review each piece of information. All these 28 pages, go through all of them. Don't skip any. Ask yourself, what does this information mean? Why might it have been provided? Why is the examiner giving me this information? What are the key issues that have been raised by the examiner, and what are the implications to the business? All right. So, based on your review, familiarize yourself with technical topics. So if I give you a topic, can you tell me whether it's coming from P1, E1, or F1? Those are the basics that you need to do first. And just hold on. Sorry. So those are the basics that you need to do. Just knowing, is it from P1? Is it from E1? Is it from F1? Okay. Carry out appropriate financial analysis. Like I said earlier, do some profitability, do some ratios. These are the groups of ratios: profitability ratios, liquidity ratios, gearing ratios. Do some cash flow calculations. Do the numbers and have them ready so that you can comment on them in the exam. Do a pastel analysis or PEST analysis. Do Porter 5 force analysis, which stage in the life cycle, impact of globalization, and things like that. Today, we are going to do maybe 2 models, and I want us to do a SWOT analysis and a PESTEL. Those 2 give us an understanding of the whole, what's happening in this industry, and maybe quarter 5 forces as well. Yeah. So we'll do 2 models. Summarize key issues facing the organization and its environment. Yeah. We are going to do that. How do we mitigate? So if there are key issues, then the examiner is interested in how do you mitigate them? How do you overcome them? Okay, how do you leverage on them? Then do some research on the bread industry. And lastly, like I said, SWOT analysis, very, very important in this aspect. Right, some golden rules, some 7 golden rules. I got this from one of the best tuition provider in the CIMA spaces, and they talk about the 7 golden rules, and I use them myself. They do work. 1, be familiar with the pre-seen. Read it over and over and over and over again. Plan your answer. Take some time before you start typing your answer. Please take some time. Again, identify all the requirements from the sub task and write headings. The danger is when you try to just answer the entire question as a whole. Break it down according and put your subheadings and then type in there essay format. Very, very important, guys. Always remember to relate your answer to the pre-seen. Ask yourself after completing your paragraph, have I related this to Halfpenny? Did I mention the name Halfpenny? Did I mention any name of what's happening in Halfpenny? If you have not, then you need to reflect. You need to go back and ask yourself, what is missing? There is something that is happening in Halfpenny or in the industry. Right, always refer to something that is happening in the industry there. And obviously the basics, like I said, use the correct format. If the examiner says write an email, write an email. Use the format for an email. If it's a memo, same format. Okay, right. That's it. Let's get started to Halfpenny. Let's take a quick break. I'm just going to pause my recording here. Okay, so that's all about the piece of the boring stuff that I wanted us to share. Let's go in there and check the, let me go and check the actual pre-seen for Halfpenny. That's, come on. Should be this one. Okay. There, so on the first page, like any other pre-seen that you've seen, if you've looked at the pre-seen from previous exams, the examiner will always give you this contents page, which tells you what is your role, it tells you about the company background or the industry there. There's an article that is always there about what's happening in that industry, something from the website, going to give me the management structure, organogram there, who is who and who's doing what. Other information about company operations will be there. Get our financial statements there, income statement, balance sheet, and cash flow. Budgets, cost card, and all the budgets information is provided there, so no need to worry about it. It's all given for us, and the tax regime in that industry, in that country, in the key lands. Okay, so let's go in there. Your role, like I told, we spoke earlier. Your role is my annotated, my pen. So your role, we know our role. Our role is our finance officer. We're working in the finance department, preparation of management accounting information. So we know that. On background, let's look at the company background that we're given. Let me see. Is that close to that? Okay. Now we're given the company background there. So I'm not going to read sentence by sentence. My expectation is that you have this, you've gone through this. So I'm just going to give you some info, some notes that I put down here that we can always help you to understand um, this company and this industry much better. So most important information, the company was founded in 1891. Straight away, that opening sentence tells me that if I'm looking at my SWOT analysis, then I am going to look at this company, Halfpenny, have been in the business for very long time. It gives them an advantage in terms of understanding the market dynamics and what happened in the industry. They have seen the transition from where they were when they were selling bread through its own bakery stores. But in 1952, something happened in 1952 here. It says, until then, all the bread were sold by halfpenny were unsliced and packaged, right? But they changed and they made their focus to production, right? And we are producing goods, that means we need raw materials. Different raw materials, again, from my knowledge of P1, it means now I need to start thinking about my costing there, right? And again, when they are buying the raw materials at a certain price, the price might change. So we might budget to say, okay, we are going to buy our raw materials is so much, but then because of other factors, the price might change, which throws me, for me, variances becomes something that I should look into there. Then they continue to grow. And it says here, Halfpenny, where is it? Halfpenny currently produces, yeah. Halfpenny currently produces a range of sliced bread loaves and packaged bread rolls, right? A range, right? If it's a range, again, it takes me to aspect of some thinking of some costing and some variances there. Again, ask myself, or something that I need you to ask yourself is the costing methods there, marginal costing, absorption costing, activity-based costing, and which ones are they using there? Okay, and if you go to your financial statements on page, something that you might also want to look at that from like latest financial statement that is on page, where is my financial statement? Let me go to my printed copy, where is it? My financial statement shows me that these guys, they made sales revenue of 332 by just rounding it off. In 2024, 331,600 is 332. And they also made an operating profit of 90 million. So there's almost a 30 million. There is a margin of almost 27% there. We are going to do the numbers in the next sessions there, in the next upcoming session. So they made a little bit of good margins there. Something that also is very interesting is that if you go along this company, they are using electric vehicles, right? So straight away, when I hear about that, I'm thinking about E1, sustainability. I'm thinking about sustainability. It's a question that they might ask you. So I need you to think of integrated reporting. I need you to think of the 6 capitals of integrated reporting, right? So yeah, it's something that I want you to look at. If you go to the bread industry in Keelan, there's a breakdown there. Talks about large bakeries, in-store bakeries, and high street bakeries there. And in terms of market share, market volume is given there. You can see the market share of 80% is large plant bakeries, and market share by sales value, again, 70%. That's where most of the business is, with large plant bakeries. And if you look at it, how Halfpenny is operating, they're supplying large plant bakeries, in-store bakeries, and high street bakeries. I'm thinking the examiner might be interested in, do you think Halfpenny should also do B2C? But this is B2B. Should they go to B2C? Should they sell directly to customers? Should they also do their own brand, own supermarkets. What do you think? Their business model, does it allow them to that? Does it fit into their business model? Something to think about that. Quick look at all this other information. You need to go through this. I'm not going to read sentence by sentence here. This is the story where it started with Martha and Bert in 1891, and they've got the it says 1916 and so on and so on. Just go with that. Let's go on our mission. Here, the examiner might come up with something here. Give you the best tasting bread in terms of ranges of flours. So there is Halfpenny, they've got one supply of yeast. Very, very dangerous, isn't it? And they've got few suppliers of flour. So there could be a question that might come from that perspective where there could be some challenges with the suppliers of yeast, or some challenges, or another new supplier for flour and yeast. And now we need to be very careful to say, when we make decisions about bringing in new suppliers, what is the impact on the business? Because our mission is to provide the best. So we need to evaluate our suppliers to say, are they going to give us the best ingredients or the best raw materials? Highest quality of flour. Yeah. So when we are doing our supply, how do we bring our suppliers on board? Sustainable suppliers, we treat fairly. Yeah. Carbon neutral by 2040. Already there is a commitment from Halfpenny here by the fact that they are using electric cars. For me, it tells me that the management has got some kind of a good focus on sustainability into the future. Our products here, white, multi-seed, whole wheat, and all that stuff, something that we need to look at and look at what are other alternatives. Let's go here and look at this board. This structure here, we've got the managing director, 49 Trey, descendant of Martha, and also basically son of these guys to study this. He's been here around for many years. We've got Rosa, the sales and marketing director, degree in marketing, perfectly fine. He's responsible for Halfpenny branding, product development. Harry says, interesting something that Harry is doing here. Harry is a talented baker and is keen to increase the range of products offered by the company. There is a statement where the examiner might actually generate a question from. So the first thing I need you to ask yourself is, which costing method are they currently using, right? And what is the alternative if they're going to increase? So they are currently doing what I was talking about, what is their current costing method? And if they are going to increase a range of products, then that is a question where I'm saying, oh, they should relook at their current method, and maybe they could say, now we need to introduce activity-based costing, because now they've got a range of products. Activity-based costing becomes relevant, and what are the benefits and how they can implement it. That's very, very important. Okay, so that's a potential exam question there. Then we have production, there is finance. Like I said, Sumira, she's a firm believer on incentivized workforce, right? So again, we need to look at that employee management from an E1 perspective. How do you motivate? How do you incentivize? What are other methods of, other ways of incentivizing employees? Then something about loyalty here, where it talks about this is here. Believe that there is scope of the company to grow through expansion into new products. So when you're producing new products, which is in line with what product development, there is synergy here, what the finance director and the product development director, they're all talking about. Harry is talking about is a talented baker, increase the range of products offered by the company. And here again, the finance director, Lottie, believe that the company should grow through expansion of new product, which means from a financial perspective, she's willing to put in a budget there. So they are currently using incremental budget. Right, they're currently, so Halfpenny is currently using incremental budgeting. Now, if they're going to increase the range of, to expand into new products, should they continue using incremental budgeting? The examiner is keen to know what are other budgeting techniques that can be used by Halfpenny. Can you explain them? And what are the benefits? And how can they be implemented? If they are going to be implemented, what are some of the benefits or the drawbacks that can come out as a result of that budgeting? So think of incremental budgeting, think of rolling budgeting, think of zero-based budgeting, and something to think about. Okay. Scroll down. I'm not going to waste time here. Spend some time looking at this structure, who reports to who. Yeah. And let's see. Some info there. I'm keen. So this, again, production facilities, you've got mixing, shaping, baking, cooling, all that. That, again, this just makes me think that a question on activity-based costing is a strong possibility here. And then with raw materials, mixing, needling, and then that's, I think, from this perspective, the questions about variances, they will come in here. Okay, with our flour, yeast, grains, the mixing will be, there will be potential examination question there. Now, let's look at distribution. Under distribution, we are told that this company, Halfpenny, they own their distribution center, which is located next door to the production facility. Again, another good potential exam question might come in there from, I need you to go and look at the value chain by Michael Porter, right? So if they own the distribution center and it's located to the production facility, it means from a time and cost perspective, they've managed that very well. Inbound logistics becomes easier. Again, operations, because there is no much traveling in there, they employ their own drivers. So what they've done is to make sure that time and cost is managed very, very, very well. We are dealing, or the Halfpenny deals with a perishable product here. So the raw materials cannot be kept for too long. And also the finished product cannot be kept for too long. So there should be efficiency in terms of managing our inputs and our outputs to our final products. Okay, so it says here, throughout the day, finished loaves and packets of rolls are transferred into the distribution center on pallets. Each type of loaf and packet of rolls has its own dedicated area on the center, right? Okay, costing there to track where our costs are coming from. It's very, very important there. From the date of production, Halfpenny loaves and rolls use sell by date of up to 2 weeks. So they would after 2 weeks. It's fairly fine for that. So, but again, we need to go into our financial position and do some numbers in terms of our inventory turnover there. We are given the number of employees there. So actually, before we get there, 5 large supermarkets, that's the market. Some delivers to the depots and some direct to individual stores, right? So we can say there are 5 large supermarkets in there. So Porter 5 forces analysis, when you look at the industry attractiveness and profitability, look at the players in there. So do some 5 Porter's analysis there to help us to understand this industry much better. So the numbers of the employees are broken like that. Nothing very hectic here. I think it's all about managing your employees. Again, fascinating. If you go back to that management structure, there is one guy who joined us from the competitor. We don't want that to happen. We don't want to lose our key staff to our competitors. How do we keep our staff motivated there? Then here is an article, what makes a winner? What makes a winner? Industry bread making. Guys, I need you to read about this in the next session. We're going to refer to what interview that was done by Trey Halfpenny. Yeah, when their white loaf was voted #1. From a SWOT perspective, that's a strength when your bread is voted #1 by customers. So again, when you do our SWOT analysis, we need to look at that. So this whole interview is a read for you. I'm not going to read that, but I'm very fascinated to go on the information here, on the numbers. Let's do some quick numbers here. 2023, 2024, we can see, like I was saying, guys, by just merely looking at this, you can do this increase in revenue there, cost of sales increase in that, but we need to do a little bit of numbers. So if I did a bit of numbers there, and from a gross profit perspective, 2023, 2024, there is, if you look at the from 327.30 to 331,600, is a 3.4 increase. There's an increase of 3.4, so which is okay. Gross profit margin 27.4 to 27.2. Now, if you look at selling and distribution there, selling and distribution is stable as well. If you look at the cost of selling and distribution, it's pretty stable. Our operating profits, I did some numbers there. Before I go on the operating profit, yeah, if you look at our operating profit, there's a slight, it's just a small increase. It's very small increase, insignificant, which is very something to think about, because our operating profit is not changing that much, but with the 3.4 in our revenue, we need to do a bit of numbers to see why. So if I go to our balance sheet, in our balance sheet, I need you to look at, like I said, do some ratios there and look at trade payable days, look at receivable days. I think it's around, in 2023 it was 53.4 days. In 2024 it's 52.4. There's no, it's just insignificant. Again, 1 day shorter in 2024. Inventory holding period is almost 12 days in 2023 and 14 days in 2024. We need to spend some time to do some numbers. So what my homework, the next homework that I need you to do is to go and do some ratio analysis, and we can comment on the ratio analysis in our next meeting as well. Okay, so that's our statement of cash flow there. Let's look at cash movement. Okay, so again, we'll spend some time looking at the numbers from some changes here in the cash flow. Some budgeted total budgeted gross profit, right? Very interesting there for 2025. So that's where your ratios are going to come from. So some of your ratios are coming from here. This is budget for 2025, so we can look back to 2024 and see what is the difference there. So we're given for bread loaves, we're given for the bread rolls, we're given for the total there. Oh, sorry, what did I do there? Okay, took a bit of a pause there. Some more information that we are given there. I don't want to go in there today. Before I first want us to do a SWOT and a pastel, and then we can look at the numbers in workshop 2, which is coming on Saturday. But look at these numbers there. So it's for our sales revenue that we are given for the different bread product that we make: white, whole wheat, multi-seed, rustics, and etc. So then we put our cost of sales, how much it costs for us there. Again, that's very important for when we do our costing, right? Okay, so that's numbers there. So basically that's the tax regime in Keyland. So what I want us to do is just to stop in here, and when we are here, then I want us to do these two things. I want us to do is that, give me a moment. Come on. I want us to do a SWOT analysis. Let's to do a SWOT analysis. Yeah. Simple SWOT. And I want us to do a pastel. The examiner is not going to ask you to explain a SWOT analysis. The examiner is not going to ask you to do a pastel analysis. No. But we do this in order to understand what is happening in our with Halfpenny. And I've done a little bit of some notes that I can help share with you guys on let's look at a SWOT for Halfpenny and also the stealth for Halfpenny. Now, right. Let's look at the first one. When we look at this, got a bit of some notes here. Let's look at some of the, having read these documents. I'm just going to, as I navigate through this, I can pick up some of the aspect of my SWOT. So SWOT, I can split it into two, strength and weaknesses. And from your E1 knowledge, these two, you're talking about internal factors that affect the business. Then opportunities and threats, ONT, these you find them outside the business. Then pastel, these are macro environmental aspects that affect the business. Why are we so concerned about the macro environmental factors? It's because they're uncontrollable. So the business cannot stop it, they cannot change it, but what they can do is they can adapt. Halfpenny cannot close their business because of political, economic, social, technological, no. But they have to adapt to see how, therefore, do we continue to operate in this industry given all these changes. So one of the biggest strengths I think I mentioned earlier is that Halfpenny were founded in 1891. What does they tell me? They tell me that they have seen the changes in the industry. They have continued. They have been resilient over time. And that they give them an edge over others. That they have developed competencies. They have developed economies of scale. So that's one strength. Again, we are told there are 5 major supermarkets. They are one of them. So if you look at from a Porter perspective, the intensity is there, but it's attractive. We are told somewhere that is on the industry reached its maturity stage. So but it's one of them. They're one of the big 5. Is a strength. And what they've done, I think, if you go back on page, what page is it? They've got their structure. They've got a structure with people with experience, and they've also their management team is dedicated. They've got functional areas, different functions. With the finance team, we've got sales and marketing team, we've got production. So the structure there enables them to specialize in their domain or in their area of specialty. That's a strength that people, they specialize. They spend time doing what they know best, what they've trained to do, and they've developed another strength that they've developed good relationship with their suppliers over time. And I'm looking at they are already doing something about sustainability. We are told that they're already using electric cars. Most government, Keyland being one of them, and other governments globally, focusing on sustainability, protecting the environment, and they're already doing that, which is a good thing. They've invested. Look at their balance sheet. Look at their balance sheet. They've got a good balance sheet. They've invested so much in their PPE, plant, property, and equipment. You can look at the balance sheet to show. You can see some good numbers in there, which shows that they are a growing organization. Now, enough about the strength. We've exhausted some of them. Let's look at some of the weaknesses that we can point from this Halfpenny. I think one of the weaknesses that we can pick up there is that Halfpenny, in as much as in their mission statement, they talk about quality. But what are they doing is very silent in terms of their quality checks processes, in terms of their over-reliance on one yeast supplier, right? That's for me is a great concern. Another concern could be they are using incremental budgeting, which for me, it can, by the knowledge from your P1 tells you that incremental budgeting, if there is budget slack, then that budget slack is built from one year to another. So I think that's not a good one. If I look in their balance sheet, there's too much inventory in there. There's too much inventory that is tied up. So they could. It's because of the nature of the product that they're selling. I don't think it's a good idea to keep so much inventory. Okay. Let's look at some of the opportunities. They are so congested and so populated in Keyland. So they could look at geographical expansion. I need you to go and look at this model by it's called the Ansoff matrix. Ansoff matrix talks about 4 growth strategies: market development, product development, diversification, market, product, diversification. Look for the 4th one. Okay, look at Ansoff matrix and see how they can use it as one of the in one of those strategies there. There is so much focus if you do the case study. The Pre-seen materials tells us that consumers are becoming more healthy conscious. So it makes sense for Halfpenny to therefore look at other products like maybe more gluten-free, less sugar in their products and things like that. How are they going to do that? An opportunity is for Halfpenny to develop an app that can enable them to engage with the customers, can enable them to collect data from customers, and able to get feedback from customers. So I think it's an opportunity to, since I said earlier, there is no much talk about digital systems in Halfpenny and technology in Halfpenny. Yes, they've introduced technology, but not that much. There's less big data mentioned in this Pre-seen. So technology in terms of product, in terms of collecting data is very, very important. And also in their processes back to our value chain, in the process operations part, they could actually, there's an opportunity for them to introduce technology, let's say in their mixing and their needling stage. We don't need manual labor to be doing that. Cost and time is very, very important in this business, this bread business. So put technology in there, right? And some obvious threats for the business is competition. Obviously, there is in-store bakeries. They tend to come up with cheaper products, cheaper bread, and if the market becomes price sensitive, then it might cause a big concern for these big 5, including this big 5, which includes Halfpenny. There could be we could look at some legal aspects against because of the nature of the product. There could be the Keyland government can just come up with some new regulation that they need to comply with, which might need some resources for them to comply. Another threat is that they have got borrowings go into their financials. You see, they've got some huge borrowings there. Is it a sign of things not looking well, or it could be just borrowing for investment purposes? We need to look at that. They also do leasing. That's why I said now, because they do a bit of leasing. For me, it throws me back to the aspect where I said, it means you need now to go and understand a little bit, not much, but you need to go and do some reading on some few standards that can help you in terms of understanding how is it going to work. If they're using leases, you need to go, it's IS 16, I think, that you need to go and do a bit of reading there. Let me just check on my notes quickly. Where is that note that I made earlier? Okay, if it's not here, I can always bring it. I can always bring it. Okay, it's not here, but I'll bring it on another in the next workshop. No worries. So that's it in terms of our pastel. In terms of our SWOTs, we look at the strength, weaknesses, opportunities, and threats. I think we've done so much for this one. Let's quickly rush through our pastel. So pastel for political, economic, social, technological, legal, and environmental. Now, political, we need to look at political, looks at all the aspects. We are told that this Halfpenny operates in Keyland, and Keyland, therefore, Keyland has got its rules and regulations that govern this manufacturing of staple foods, such as bread. So, key consideration could be if the Keyland government introduced some new regulation on food hygiene, on labeling of products. How is Halfpenny going to respond, right? Suppliers, because of the nature of the product in the staple food, if the government subsidized, good one. If they don't, it might affect them negatively. Some tax, again, on products, it's an issue. That's a bit on politics, on political. Then you look at economic, you can look at the changes or fluctuations in prices of raw materials, of labor, and things like that. There could be some labor shortages. How is it going to affect skill? Remember, we said these are external, and the government, the companies got no control in them. What they have to do is just to adapt, but they cannot close the business, they cannot run away, but they have to adjust itself. So from a social perspective, we need to look at consumer preferences. We are told in the pre-seen material that consumers are becoming more and more healthy conscious. There is a rise in more personalization in food consumptions. So the bargaining power of customers is getting bigger and bigger all the time. How do they respond to the growing bargaining power of consumers? The customers or consumers demand more locally made products based on the pre-seen again. How are they going to respond to that? Then technology, again, if you look at the technology, what I like about that is it has actually pushed or influenced CIMA to look at in the new syllabus updates. There's a huge aspect of AI there. So look at how AI can be integrated by Halfpenny. So Halfpenny can actually use AI to monitor weather conditions, because their production is heavily influenced by the weather conditions, rainy, drought, and things like that. So the more they can monitor the conditions, the more they are able to plan and forecast for the future, right? We've been facing satellites that can monitor weather conditions, that can predict rainy and all things like that. Think of robotics in their packaging, right? Time, and I just spoke about time and cost. If they put robotics there, it's going to improve efficiency, it's going to reduce labor costs, it's going to minimize human error and things like that. Think of the supply chain, right? If they put some predictive softwares there that can monitor the stock movement, that would do awesome. Think if they could come up with a chat box that customers can actually contact them 24/7, 365. It improves customer satisfaction. So many technologies to think about there, and the legal part is more linked to political there. Environmental, we spoke about them using electric cars, which is a a good for them. So guys, that's it for me today. Like I said, this is a recording of the class that we did on workshop 1, but because of technology failure, I couldn't record. So I've just done the recording. That class was very long, 3 hours, but because here there's no questions engagement like we were enjoying. So it's just that. But thank you so much. Meet you on Saturday. Saturday is going to be myself, or it's going to be our second lead tutor. All right. So whoever comes, will meet you there. Thank you so much, guys, and goodbye.